How's it going? I'm Andrew with Investors Hub, and we got Spicy Clem today for Clem's Day Wednesday. If you guys don't know, Clem Chambers is the CEO of ADVFN. He's my boss, and we're going to be chatting about the latest run-up on Bitcoin and whether or not he still thinks we're set for a bear market coming soon. He also weighs in on inflation and tells us how he's trading the market right now. So if you like the video, please be sure to like, comment, and subscribe. You can follow us on Twitter, ihub_vision. And after a quick disclaimer, we'll hear from Clem. Please note that our videos are not designed to be direct investing advice. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So, Clem, we saw Bitcoin run up again to around the $50,000 mark, and then it seems to have stalled out a little bit. My thoughts are that maybe this latest run-up was caused by the market correcting to the fact that it overcorrected whenever we got all that bad news coming out of China, and that's when it dipped to around the $30,000 mark. So do you still have your same feelings that we're in for a big correction and Bitcoin is going to dip below 20,000, or is this a double bull run?
Well, I wrote a piece, I can't remember whether it's for Seeking Alpha or whether it was for Forbes, and it said, I'm a bear, it's going to do that. Here's the chart. That's what bears see. And this is what bulls see. And what you see on that chart now is what you would see on what I said bulls would be thinking about what's going to happen next. It's exactly that chart. I'm a bear, so I don't agree, but they're right. And if you wanted to be bullish about the chart, that's what it would do. However, you've got to realize that it whipped round and went under 30,000 pretty quick, and it can easily do that. But you have to ask yourself, why is it up where it is? Now, you could say, oh, well, you know, it's the institutions, isn't it? Oh, yes. So why is it going up on Saturday and Sunday? Because the institutions aren't buying it on Saturday and Sunday, are they now? Because they're all at home, you know, reminding themselves they got wives and kids. So it's coming out of the private investor. Now, the other thing is, I wrote another article that said, Sonic Wicked this way comes. Because there's just weird stuff going on in the market. And then, of course, Afghanistan happened. Now, what I see is people selling gold and buying Bitcoin. That's what I see in the market. Gold goes down at the same time Bitcoin goes up. Well, that's a bit strange now, isn't it? Because why are you selling gold and getting into Bitcoin? Well, maybe you stole a lot of gold. Or maybe you stole a lot of money and put it into gold somewhere in Asia. Because if you see the other big moves, it's in Asia before everyone else has woken up. Now, you could be paranoid about that and say that's just the exchanges doing stop loss drives when everybody who's got their stop losses in is asleep. So they wake up and go, oh, my money's gone. Where did it go? Well, it went to the exchange that drove your stops. And there's a lot of that going on. Or you could just say money in Asia is selling or buying. So it's Asian action. So who's got a problem out there that they're buying huge loads of Bitcoin and selling huge loads of Bitcoin? Somebody has. Well, now, if you look at Afghanistan, there's been $1,500 billion gone in there. And it's all got stolen, hasn't it? I mean, you know, hey, half of the GDP is aid. What's their problem in Afghanistan? Why did the Taliban just walk in? Well, because all the bosses stole it all. So they stole all the money. Well, maybe it's a bit inconvenient to have it in gold in Singapore or wherever you stashed it. Maybe it's better to have that in Bitcoin. But, you know, why did America walk out of Afghanistan? Because they just went, these blooming Afghan government people, they're just stealing all the money. They can't be relied upon. They're not doing what needs to be done. We give them money for police uniforms, it goes missing. We give them money for some agricultural project, it goes missing. Well, it just doesn't go missing. It ends up somewhere. And of course, all those people, if they made it out, are now shuffling all the money they've stolen, aren't they? So I'm kind of suspicious that the something wicked that was coming was Afghanistan, because everybody knew, right? Everybody in power knew. All the Afghan officials knew, because they'd obviously been slapped around the head by America saying, you know, we're giving up on you now, you idiots. We're just going to leave. He says, you know, what are we expected to do? You keep stealing all the money. You're so corrupt that we might as well just be handing it over to thieves. Well, which is exactly what happened. So then you've got all these billions, untold billions of stolen money to process. And of course, Bitcoin is quite well known for that. And of course, gold is quite well known for that. So it wouldn't surprise me. Now, what should happen if that theory is right over the next 2 or 3 weeks, once they've got their affairs in order, then the Bitcoin should start falling off, because you make it disappear from your gold bars or your cash in Singapore or Hong Kong or wherever you stashed it, Pakistan, India, Malaysia, and then you make it disappear, poof, into Bitcoin, and poof, it reappears somewhere else, and it turns into assets. So you should get that buying and then followed by selling. In fact, I think that's what I see in the Bitcoin market. I think I see buying in Asia, selling in America, selling in Asia, buying in America. I think I see that move of Bitcoin assets from Asia into America, out of America into Asia, because it's a two-way street, because you're shuffling money around and people are buying and selling, etc., etc. So that's what I feel is being happening. But of course, it's a totally different picture, because Bitcoin, one of the things that Bitcoin is a fantastic haven asset. That's one of its key use cases. So if all of a sudden people want to, get out of Dodge quick, well, there's no way better than to do it with Bitcoin. You can't do it with gold. I steal $1 billion gold. That's 30 tons. I mean, I can't. Please, can I get on the airport on the plane with 30 tons of gold, please? It's not going to happen, is it? Yeah. Or I want to move my gold. Well, I'm not going to say, hey, I'm the ex-minister of in Afghanistan. Please, can you move my 10 tons of gold from Singapore to America, please? You're not going to do that, are you? They're going to say, hey, you stole that. We're going to bust you. You're going to sell it in wherever you've got it, put it into Bitcoin, poof, the Bitcoin appears in America, is by definition wherever you want it to be instantaneously. And then you launder it.
So, Clem, it's been a while since we've talked specifically about inflation concerns. So how do you feel about the worries that people have for upcoming inflation? And also, how are you trading the market right now?
This market is moving a week to 10 days before you hear the news. And that goes for equities as well. Yeah. So whatever was going on with taper, that was a month ago or so, maybe 6 weeks ago, that hit the market with the people who are close enough to that decision to tell their friends, brothers, uncles, sisters, mothers, dentists about that sort of thing. So this market is really fragile because the big moves are all coming from central governments in one way or the other. And they're getting into the market ahead of anybody not in the inner circles of what's going on. That's quite a dangerous place to be. And, there is a taper coming of some sort or other, or at least a promise of it. Yeah. But, I mean, how can they taper? You tell me who's going to buy all this government debt. The $1 trillion here, the $1 trillion there. Yeah. So the Fed's going to have to buy it, by hook or by crook. And that is inflationary. I mean, it seems there's been about 30% inflation since the beginning of COVID, certainly in Europe. Although it's, it's 7%. But when you actually go and buy anything, they haven't bought for 2 years, suddenly it's 30% more expensive. So, that's real. And of course, they are printing, they're printing. So at some point, well, the prices are already moving. Gold, for example, isn't moving because it's a slow donkey of an asset. It's such a slow coach. And, if you, as trade, because I've been going around to trade saying, why isn't gold moving? Look, we're going to get inflation. Why isn't gold moving? And they say, why would I buy gold when I can buy some crazy stock that's going to double overnight? Why would I bother with gold? Yeah. Why would I bother with gold when Bitcoin can go up 25% in a week? Why would I bother with gold? It's the slowest horse in town. I'm not going to ride that pony. I'm going to ride all these fast, funky horses. So I think that's right. But I think it's also quite a good thing for it to be clop. Because I think we're in a market which is about capital protection more than capital acquisition, because we're no longer at the bottom of a market which is rising. We're somewhere in a gray zone, a fragile zone, a zone where the indices look like they're going up, but if you look closely at them, you can imagine they just started to go sideways. And that's what the Fed's going to have to do. It can't just keep making the market go up. Because if it does that, there really will be runaway inflation. They don't want runaway inflation. They want it at 7, 8, 9, 10% a year for 3 or 4 or 5 years. They don't want 30% because they'll have, the politicians will have their guts for garters. Well, they won't, because the politicians will be relying on them to keep their boat afloat. But, it will be a disaster if we get the sort of 1970s inflation that people like me are worried about. We're old enough to remember what inflation actually is. There's a whole cohort of generations that have never seen inflation. Maybe going, why's the lumber gone up? We don't understand. Why don't people want to drive trucks anymore? They're not paying them enough. They're saying, no, we need more money. Not going to do that job. No, not going to do that job. Need more money. Wage pressure. That's what creates inflation. What creates inflation? Prices go up. Therefore, people demand more wages. Therefore, prices go up. That is the circle. Now, the Fed are saying, well, it's all about inflation expectation. And we don't see that in the numbers. We don't see inflation expectations in the numbers getting out of hand. And you go, oh, that's interesting. How do they know what inflation expectations are? I'm a member of the Bank of England expectations panel. And they send me questionnaires every month and say, tell us about this, tell us about that. And if this was this and there's that, give me some percentage and all that. And they work out what the economy is expecting from panelists like me. The Fed, so I thought, they're going to have inflation expectations. People are going to be, getting hold of loads of people that are economists and smart guys and get them to fill out forms and work out an average and say, this is what they work it out by working out what the bond curve looks like. Well, funnily enough, they fix the bond curve. That's what they've been doing for years now. They make the bond curve bend how they need it to bend to do their stuff. When they twist, it makes interest rates drop in the middle, so people buy cars and the economy is expanded. Yeah, and stuff like that. So it's like saying, well, inflation expectations are low because we made them low, because we bent the bond curve with billions and billions and billions of dollars. Well, that's not inflation expectation, is it? It's when the lorry driver says, I'm not driving that blooming lorry unless you put my salary up. I'm not flipping that Big Mac unless you put my salary up. I'm not going to do that low rank job unless you pay me more money, because I'm fed up with it. And look at the prices, and I'm not going to do it. And it's not just America with its stimmy environment or ex-stimmy environment. Same in the UK. They've got terrible problems getting people in, and there's reasons and explanations for it, but it's the same thing. People want more money, or rather, even more interesting, people are getting more money. They're getting paid 20% more to drive trucks. Well, you're going to be paying for that. So there's this inflation thing. It's definitely going to be a thing, but it's definitely very, very fragile, and it's definitely all getting driven from the top rather than from a free market perspective. There is no free market. So, where you triangulate where things are going is quite tricky. You could say, well, look, they're just going to print, and prices are going to go up, stocks are going to go up, there's going to be bumps in the road, just buy and hold and ride it out. And yeah, I feel that's right. But when suddenly the market goes into reverse, like it did a few months ago, and all the risk on stocks went, and all the risk off stocks went, the market, and those that can pick up and speak to people right up the top who make the decision, say, hey, what's going on? Or rather get a phone call. By the way, something's going on. You don't need to worry too much. Everything's going to be fine. No, don't worry. It's all going to be fine. So they go, oh, yeah, well, I don't feel comfortable about it being fine. I'm going risk off now. And those subtle effects that I've been getting make me very, very nervous. And I don't want to be up to my ears in wild stocks when there's all sorts of, jungle drums beating away, and there's smoke on the horizon and the hoofs are beating. So I'm risk off. I'm only third in the market. And, the only thing that interests me right now are things like miners paying 8% dividends, because raw materials should get dragged up. And for some reason, everybody's hating on this stuff because they think there's going to be deflation. There's going to be taper. There's going to be austerity. Really? What kind of political suicide will that bring? So, I see, if you want to be risk off, or you want to take a contrarian position, and I like a contrarian position, you want to be in commodities, because commodities are, the opposite of inflation. They just go up because there's no negotiating with a mountain and a bulldozer. With inflation, it gets more expensive to move the mountain into your bulldozer, and that's the lot. You just have to put your prices up. So that's where am at the moment. And come September, when people go back to work in large parts of the world, we'll see about more normal stock picking. But meanwhile, crypto, unless there's more wicked coming, and when you think about what's just happened in Afghanistan, what does that mean geopolitically? Interesting, right? What will they be doing in other places in the Middle East? Will they be going, oh, we can be relaxed now? Maybe they'll be buying. So maybe there will be this new demand for haven assets. And the fastest haven assets, if you need to get out of Dodge and you've got a serious amount of money, there's only one way to do it, and that's with Bitcoin. Because the moment you've got it in a wallet, it's gone. It's not on the planet. It's in the multi-dimensional land of mathematics. As long as you don't lose that 47-digit number, you're in great shape. You can just walk into the airport in your underpants and you're with your passport in your hand and leave as long as you've got that number somewhere safe. Try doing that with gold. So, it's going to be interesting, because if things settle down, Bitcoin can move very fast in any direction. And it will.
Hey, thanks for watching. And if you haven't already, of course, please be sure to like, comment, and subscribe. And you can follow us on Twitter, iHub_vision, and I'll see you again soon.